Happy to see you once again in this video. I have been approached by quite a few of my friends who are working in different companies in different sectors, and they asked me how do we identify companies or the entrepreneurs who are running the show, or maybe their managers. How do we know that the company or the people thereof are genuine and they are reliable enough? So, with my understanding of how certain things have been in the past or recent past, or maybe in the last decade, how certain companies, certain entrepreneurs are taking an advantage of certain situations, maybe due to their fault, maybe due to circumstances, maybe due to their greed, or maybe due to their ignorance, or maybe due to deliberate actions not commensurating with their positions. So, from that perspective, today I'm going to give you some tips or red flags where you need to look out for such practices or people and accordingly take a decision. Of course, there could be some scenarios where you may not be even aware of. For example, between two companies, what could be the contract the entrepreneur or the company has signed up. So you have to give that kind of benefit to the company or the entrepreneurs. But barring that, you need to find out how their behaviors are, how their business tactics are, and that is what we are going to discuss today in this video. So, why recognize these unreliable entrepreneurial practices? So, that's the first question we need to ask ourselves. Understanding early signs of unreliable behavior is crucial for protecting your investment or your business or your partnership, or for that matter even your employment. And here we are going to discuss how these practices, for example in the areas of financial management or mismanagement, or sincerity in actions, or the business operations, how it is going to impact these practices, these unreliable entrepreneurial practices, and how do we recognize that. That is the discussion we are going to have today. And first, let's start with how do we spot red flags in financial management. So the first thing could be is unrealistic promises about returns or growth of the company or the product, or for that matter it could be even the business divisions within the company. And there will be a lot of cash flow issues masked by constant fundraising. So what happens here is that I need money, I mismanage, okay, or I manage but I didn't manage correctly. Let's take these two scenarios. So to manage my cash flow requirements, I have to borrow some money, or I have to fundraise. And once I fundraise, I will use it for my own purpose, and the business suffers after some time, immediately rather after some time. So then again, quoting this scenario, the company or the entrepreneur raises the money with another set of investors or fundraising activity. So this frequent fundraising for any cash flow issues is a suspect. Coming in of personal and business finances. So somebody, what they will do is that as per law certain things are allowed, but at the same time mismanaging the personal finance and business finance. So what happens is that they will use personal money for businesses and business money for personal thing. Probably they will buy a car for themselves and use it for company and rent it out, and that kind of an arrangement, or they may buy it on company's name and use it for personal purposes. So it could be any of those things. And the next important point on this financial mismanagement or management red flag is over reliance on new investments. So basically, they will say that, yeah, I have so much of my debt, or I need so much of money, so I go for new investments. Then once I get the new investment, I try to manage the existing loans or something. Then again, that will lead to another kind of scenario where again you need money. So again, they will go for another investor to pay off the previous investor. This is like a Ponzi like scheme or behavior which you would have seen in the markets. And the other important aspect is lack of transparency in financial reporting. So either that reporting can be within the company or to the government or to the investors, to so many people where they are expected to give, and they misreport that. The next one is with respect to debts and loans. The red flag here is that they delay or avoid loan payments. So suppose something is on due, you will delay. So that what will happen is that the moment you delay the payment, that the delayed payment will attract penalty and fine, and it will have its own interest rates, and that gets accrued, and like that it keeps on growing. Okay, so you need to look for any delay, or people try to avoid the loan payments. Taking on unsustainable high interest rate loans. So they will say instead of 10% loan, they will try to take 20% loan, and I will give you. So these are all again mismanagement related topics. Constantly renegotiating the terms without addressing the underlying financial issues. So where does the financial issue comes from? Maybe you are not using the funds properly, or you are misusing it, or maybe you are not capable enough to run your company operations, like product development or software services or any services, or the operations thereof. So if you do not know how to run these, so obviously you will start taking loans, and then because you are not able to repay, you will go back to them and say, yeah, please come down on your rates, I'm not able to pay you, something like that. In fact, I have seen the worst scenarios like here that I take some X amount of money from you, and what will happen is that because I cannot repay, I may even come back to you saying that unless you do these activities for me, and you earn from that and take your loan payment from there itself and return the other part of the money back to me. So there are circumstances, there are companies, there are scenarios, there are people out there who have done such kind of things. Using phantom collateral to secure new lines of credit. Here, what does it mean is that actually you don't have that document or the property or the underlying collateral which you have to securitize. So they will try to create a imaginary collateral, saying that this is what it is. It is not perfectly legal though. So they try to do that and give it. So today there are a lot of banks, they verify such kind of scenarios. Maybe they try to attempt 2-3 loans parallelly, simultaneously. So all these things, what it will do is that window of time where when banks receive a request, for example, or some investor receives that request, by the time the investor A process, by the time the bank B process and somebody else process, in that window their debts won't appear. If A is going to pay money, B and C request won't be appearing for them, the same way for others. So A thinks that the person has approached me only, B thinks that the person has approached me only. So in the process, sometimes A, B and C might give the debt, give the loan to the borrower, and assuming that this person has got only from that person. So there are scenarios like this. And the next important thing is with respect to vendors and suppliers. So again, here is a delayed or partial payment to vendors with the promises of future compensation. Okay, don't worry, today I'm doing good, and I have a momentary problem, and you bear with me for now. I will compensate this loss in the future. Okay, sometimes people even go to the extent of compensating with the equities. Okay, I mean, while it is on paper, certain things you cannot do legally, certain things you can do legally, because there is a conflict of interest, and your board of directors and your company board has to approve certain things wherever there is a conflict of interest. And such people or companies where they operate like this, they ignore this conflict of interest also, and frequent excuses about payment delays. Okay, this is again like quoting bank issues. I gave something, bank didn't do properly, or I gave it to my customer, customer didn't do properly, and their finance department is not correct, or their project manager has not approved. So there are so many excuses by which something or other they will say to delay the payment, and breach of contracts by not fulfilling payment or delivery terms. This is again, we discussed this as part of the contract topic separately, and this is one of the major reasons, because either the company has not paid them money, or they will change the scope of work, and then they will complain back saying that, hey, you vendor, you are not doing your job, so I'm going to cancel and I'm going to penalize you also. It is the reverse. Okay, so that's one area. And what they will do is that they will have multiple vendors, and they ensure that there is a confusion between these vendors so that they can thrive, and they will penalize on vendors saying that you have not done your job. So there are situations like this. The next topic is with respect to employee salaries and benefits. So again, there is a regular delay in salary payments or benefits, empty promises on bonuses. Okay, what they will say is that okay, don't worry, you are doing great job, I will give you increment, I will give you bonus, I will give you promotion and all that. Or maybe they will say they will give you stock options or future compensation, so many things. But when they don't have money to pay you now, how do you expect them to pay you at later time? So they will renegotiate the contracts, the employment contracts, their terms and agreements, saying that they will they will annul all the previous payments due thereof, or they will change your employability conditions, like from 1 month notice period to 3 months notice period, or 3 months notice period to 1 month notice period, or sometimes it could be at will also. So such kind of contract renegotiations with respect to employees, that's a clear warning sign. And sometimes what happens is that some companies or some entrepreneurs, just because they want to retain the employees or for any other reason, they won't file your taxes or any statutory requirements to government. They won't fulfill, or they will ensure that they keep some money, so that what happens is that even if you leave, they have a hold on you. So either you won't leave, even if you leave, I have some money out of your work kept with me. So that's another trick or tactics followed. So then what will happen is that they will assign you a role officially, but you will be asked to work on some other unassigned roles, and quoting that as a reason that your focus is on the unassigned role, whereas you failed on your assigned role. So you qualify for a pink slip. So that's how certain behaviors of certain managers or entrepreneurs or companies are. These are all clear red flags. The next one is handling pending payment promises. Okay, don't worry, the check is in the email. You can, when you open the mail, you will get the check. Okay, but actually I have not even done anything from my side. Okay, so that is a false promise. And they will say, hey, don't worry, my investors, I have lined up so many people and they are ready to invest on our company, my product, or this is the best team ever, and they are very happy to invest. So Once we get the money, all the financial problems of the company and you will be resolved. So don't go, don't think of something else. Stay with me. Or they will blame external parties for delayed payments. Yeah, I want to give you money, but unfortunately that guy has not paid me money, and that could be a chain, or it can be a bank where they are supposed to paid some money or loan or whatever it is, or it could be client. So you would have raised the invoice, that guy has not paid. So it could be any of those things. So basically, he's blaming external parties, and sometimes what will happen is that, yeah, you're supposed to get 100 grants, whereas I give you only 30 now, and don't worry, in the 70 I will pay it in the next week or in the next 2 weeks, by quoting some vendor problems or some other employee's problem. And in the process, what they will do is they will buy time with you. So these are all the red flags with respect to employment. With respect to reporting means a company has to report to government, investors, and there are a lot of people who need this reporting. Okay, so what they will do is that they will try to overstate the revenues or underreport their expenses. This is a clear red flag. Providing manipulated or doctored financial reports. This is actual, but what I filed with the government is different, what I have is different. Or they may have different manipulated reports based on the type of investors. And financial metrics or financial ratios, for example, what they will do is they will fabricate certain metrics to show the false business growth. And they may even hide the true financial liabilities from investors or partners. So I would have taken n number of loans, but I will show you only few loans, whatever I want to tell the investor, so that I have revealed, but I have not revealed fully. So this is hiding true financial liabilities. And the next one is related to the tax and legal compliance issues. So obviously avoiding tax liability is a clear red sign with respect to income or inflationary deductions, because there's a lot of people will try to use certain deductions, maybe inflate that deductions so that they save some money. Failing to pay employee payroll taxes while continuing business operations. They think that they will save a lot of money, but once the employee also files, it creates a kind of clash. So they won't give you the compliance forms or the slips, salary slips, etc. Or in the worst case, if something goes too beyond my capability, I will threaten bankruptcy. Okay, I will close the company and do something else. And certain cases, what they have done is that they will use lawsuits as a tool to delay payments to evade accountability. That kind of situation also happens, because the money they are going to lose by filing a lawsuit might be less than the original liability itself. So they may play such kind of tricks. Now let's move on to certain behaviors and actions and faking. So here the first one is making promises they have no intention of keeping. Yeah, just is an empty promise. Because you asked me, I'm throwing something out at you, but I'm not going to fulfill that. That I know, but I'll tell you the way you expect that to be fulfilled. And deliberately they will go roundabout or unwarranted actions towards the making of their product or services or their business operations, or that includes rendering services. These actions might give an impression that, yeah, we are working very hard, smart, etc. But that need not be the real intention behind. Providing vague, inconsistent information to avoid scrutiny, so that when somebody asks, when an employee asks, or when a government official asks, or the board of directors or the investors ask, or the shareholders ask, they will give part information which may be partly true, but the rest of it may be a false one, or it may be a factored or doctored one. So they give that kind of tactics by which the information is inconsistent or it could be even vague. Sometimes what happens is that they don't own any failures, or they don't own accountability on delays, and instead they will try to blame that, yeah, you didn't do the job correctly, because of you the company lost, because of you my investors lost. So they transfer the accountability from themselves to you. And sometimes what happens is that they use surface level charm or manipulation to distract from deeper issues. Okay, the deeper issue may be really, really deep, that they are in a big hole, and whereas when you approach them, they want to cover up, saying that, yeah, don't worry, all these things are fine, and you are in the safe hands. Okay, frequent deflection when asked direct question about the business financial health. Some companies may have a kind of employee sessions, or investors may have frequent board discussions. So when asked a direct question, what they will do is they will try to show mirror, and so that it doesn't come to me, it goes to somebody else. Somebody is accountable, not me. That is the kind of reflection they will try to play. Now let's talk about some faking scenarios, where how the customers or investors are duped. Okay, overstating the number of customers or market reach to appear more successful. This is a clear faking. Fabricating customer testimonials. Customer would not have said so, whereas people would have used the language grammar in such a way that they lure the customer investors, or they may even lure some other prospective customers down the line. Presenting misleading future projections to convince investors to fund the business. This happens quite heavily of late, where they try to project, saying that you will get 3x, 5x kind of revenues, or maybe or profits for that matter. And so if I do with some X number of people, or with this kind of features of the product, if I'm able to generate this revenue, they just simply in a spreadsheet they multiply by another 10 factor or another 20 factor. Obviously, by simple mathematics, the number will be good. But the underlying thing is that there should be an engine within the company that creates this, right? That's where the capacity or the capability of the company is. And whether the company has got that wherewithal in terms of employees knowledge, processes, tools, and ability to reach to the customer, and acceptability of the product or solutions or services to the customer, that they completely ignore, whereas they just present a misleading projection. The same way how managing the boards happen, which is again a red flag, is that the board will be kept in dark. Though they try to meet once in some frequency, they will try to project it in such a way that selectively they will present the facts, whereas they hide a lot of information, or they provide incomplete information. And stacking the board with loyalists who do not challenge the decisions. This happens in many companies, many corporates, so that whoever says that, that becomes the final, and the others will blindly say yes, or maybe some genuinely somebody might ask, but it may not get reported at all. Or sometimes what happens is that downplaying financial or legal or operational risks to secure continued support. So what happens is that by contract, that business operation is not going to be good, knowing that they downplay the contract liabilities, but projected it in such a way that they get continued support. The another behavior is hopping. So I come to you and I need some X amount of money. So you can't give X amount, so you will give maybe X minus something. I take it. The moment I take that, I ditch you, and I will go to some other person. Again, I will ask for X amount of money. Again, I take full or part amount, and if you are not willing to give me, I'll go to somebody else. So this hopping behavior is a major threat or major challenge, and you need to look for that. Abandoning projects after securing funds, leaving investors with losses, or keeping them in dark, that's a major red flag. Engaging in serial entrepreneurship, yeah, there are a lot of people who does that, okay, but without taking accountability or repeatedly shifting focus to new ventures without taking accountability, that is again a red flag. And to receive money, what happens is that they ghost investors, they avoid communications. So again, this is another thing which you have to look for. So with respect to the capabilities, okay, how the faking happens, that I will tell you. Over promising services or features that the company cannot deliver. I know very sure my company doesn't have the capability, my team is not meant for that. Still, I go and commit. Yeah, we will do that. Or I know that I am not going to manage the progress of the project or the whether it's a development or any projects. I know very well, but still I'll go and tell the world that yeah, this is going so good, so you don't need to worry. Sometimes what happens is that they will stage demos, they will stage product pilots or demos or but that do not actually reflect the actual state of the product. That's kind of faking, where certain things may be in case if it is at IT based, certain things could be hard coded, or if it is a mechanical thing, that design may not be the real design matching with the expected product. So they will say that this is a minimum viable product, but that design is no good, or it doesn't even stand a comparison with the real product. They go even further to the level of claiming that some features which are not existing or some capabilities which the product or the company does not have, or service they do not have, they overstate that to attract customers or investors. The other one is with respect to launches, faking on launches. So I'm going to open a company in some other country, and we need quite a lot of investment, and or I'm going to spend so much of money on that, and but actually at best they would have opened the office, or not even that, maybe they would have signed up some back-to-back arrangement with some other company existing in the marketplace. Or sometimes what happens is that they announce the launch of the product to generate buzz and attract investment. That's all. Once you get that money, that ends the matter. The other common factors we would have seen is that coming soon. This strategy is basically to string investors and customers along with the delayed timelines. So every time I say coming soon, wait for this, coming soon, watch out for this. So that means there is going to be a delay. Now, I'm not saying that every coming soon is having this problem, but this faking launches might adopt that kind of a strategy. And as I said, they will release a minimum viable product disguised as a final version. Then they will improve. But in the meantime, the customers or investors will think that yeah, we have got a fantastic product. So in conclusion, what you need to be very clear is that how do you protect yourself from unreliable entrepreneurs or unreliable business ethics or unreliable companies. So you have to stay vigilant for early signs of mismanagement or dishonesty, or look out for opportunities where people play victimhood, whereas actually they are the culprits. Conduct your thorough due diligence in whatever role you play on any business partner or entrepreneur or the company or your managers. And always, of course, you need to trust. I'm a philosopher of trust. But when there is an issue, you need to verify. So you adopt the policy of trust but verify. So always cross-check the financial promises with independent sources. There are quite a lot of social media or corporates doing this kind of independent source checks. And recognizing these insincere behaviors can help you avoid financial or operational risk. If you are an investor or if you are an employee, you don't get deceived on false premises that you are not either gaining the knowledge or getting your money or wasting your time with that kind of a company or the entrepreneur himself or with your managers. Hope you find this video useful, and I hope you will take a leaf out of this video and accordingly use it for your purposes. Thank you. This is Google. See you in the next video. Cheers.